Bitcoin and crypto's future with Mark Yusko. That is today's show. Welcome to Sin City Crypto. My name is David. I'll be your co-host today. Well, actually, I'll be your host today since I don't have a co-host.
Good.
Rob is still on the mend, so we gave him another day off. We miss Rob. We love Rob. We'll have him back hopefully soon. But you get me and Rocco today, and of course, our special guest, Mark Yusko, will be joining us in about 25, 30 minutes. We're going to talk a lot of things. We're going to talk about Bitcoin, its future. We're going to talk about Gary Gensler. We're going to talk about macro, the economy, and what the outlook is. And I'm going to try to get a price prediction from Mr. Yusko on the day the spot ETF gets approved. We'll see where that goes. If it's your first time checking us out, we are an entertainment-focused cryptocurrency channel. We take old, boring, and stale information, and we make it fun. We make it exciting. We make it engaging. And to you, our community, be engaged. Today's the day to be engaged. We appreciate you guys. Thank you so much. Before we get any further, I'd like to pay some bills.
Yeah.
Some of those bills are thanking our channel sponsors. Today's 4K stream is brought to you by first sponsor Cam's Blue Wire Technology. If you own a business or you run a business or you know a friend that runs a business and you want to maximize your networking, your IT, and of course your cybersecurity, which we saw what kind of havoc cybersecurity dysfunction can wreck on your business, make sure to visit bluewiretech.com or click the link in the description of this video. Today's show is also brought to you by Radix, the top layer one DeFi in our space. Radically better DeFi. We'll be having their CEO, Pierce Ridyard, joining us tomorrow to talk about the big Babylon upgrade. If you want to learn more about Radix and its ecosystem, visit radixdlt.com or click the link in the description of this video. Now, Rocco.
Yeah.
How you doing?
Doing great. How are you today?
I feel like we're bonding, you know?
Yes.
Just me and you.
Finally, I can give you, some applause.
Yeah, thank you.
I can, try
Is that
to
what
get
it
the
takes?
feeling. That's what it takes.
Robin not being in here?
Yeah, that's what it takes.
Knew he was a bad influence on you. All right, guys. Let's get right into it. You know, we start to show off, putting a smile on your face. Putting a smile on my face, putting a smile on Rocco's face. You know, in honor of Robin, because I know the man likes to work out. I hope this is something Robin is aware of and is not doing at the gym. Guys, practice safe gymming, okay?
What is this?
I've seen this video, but I'm sure you can already kind of figure out what's going to happen here. Well,
I see too many weight already. I don't know what's going on, but it's already something.
So he's got the bar, right? Squats. Then he's got the thing hanging from his neck.
Like a chin?
Then he's got deadlift. Let's see where this goes.
Hey, no shoes.
No
Just
shoes.
in case something fails, you can break
Exactly. What could possibly go wrong? I don't know.
Absolutely. Okay. There we go. That's the worst thing that can happen. That's it. That was expected.
Guys, please. Wait, that wasn't for me, right? That was for
that was for the guy. That's funny.
We have a new member.
Yeah.
Early Bird catches the worm. Catches a new membership. Shout out to you, Early Bird, for not waiting for Jimmy to give you one, for standing on your own 2 feet, for taking your destiny in your own hands. So we appreciate all the support. Thank you guys so much.
Early Bird.
Hola. Early Bird gets the shout out, which is hola. Then we have this. Know your surroundings, my friends. Know your surroundings. All it takes is
Why they're laughing?
All it takes is a tiger being in the pool. That is a tiger, my friends. The largest cat in the animal kingdom.
Yeah, but they look like they are in a zoo taking a swim in the pool of the zoo.
They might be at Mike Tyson's house. We do know he has a tiger.
Yeah.
Or at least we think he does, according to the Hangover movies. We also have this. This was so funny. I don't know why. It's so simple, funny. So just listen to the narrator on this.
These self-driving cars caused a massive traffic jam in Austin, Texas.
Okay. Hey.
Literally, the road is open, bro. Just go.
And the voice from the AI, of the voice from real people.
Guys, these are not Teslas. Don't worry. Tesla stock is not going to tank. Okay. Yeah, guys, we're still early on this self-driving technology. Excuse me. Now, we've had the likes of Fed economists, macroeconomists, and people on Twitter saying that, guys, don't worry. Even if we have a recession, we're going to get a soft landing. Well, we have visual representation of said soft landing. This is what it's going to look like. So soft landing scenario number 1. We lost a few people, it's no big deal. Soft landing scenario number 2. All right, guys. All jokes aside, we do know that we're going to get screwed. I'm sorry.
By AI, you mean?
No. By the Fed, our government, people who can't balance a checkbook, people who like to spend more money that they bring in, the people that typically declare bankruptcy, okay? Those people are telling us, don't worry, guys, we're going to have a soft landing. Everything's going to be fine. Everything's not going to be fine, or unless I don't think so. And I'm curious to get Mr. Yusko's take on this. But at the end of the day, when the fate of our financial future is in the hands of elected bureaucrats, people that make decisions based on their own self-interest, people that get their pockets stuffed with money from special interests, and people that straight up lie to our face, who told us inflation was transitory, who told us, don't worry, we're going to reduce inflation by making inflation higher by printing more money. Those are the people that we essentially have to depend on. Not anymore. Crypto is starting to become more adopted mainstream. You have multitude of banks and traditional companies moving their businesses onto the blockchain. We have payments coming onto the blockchain. As long as the internet is not shut off, we will always have an exit valve in the form of cryptocurrency and Bitcoin. So that should excite you. And you're here, right? People like to say we're early, but we are early. We're here. And guess what, guys? We're going to have the last laugh. So, all right. This is really funny. So this is a tweet conversation from my mom and me. Just kidding. It's not my mom. Someone's mom said, fix it now. This is why we don't love you. You told us to buy Ethereum at 4,000. Now it's 1,000. Oh, man. You know, let me ask you guys a question here. How do you guys feel about telling people, whether it's friends or family, hey, this is a coin I'm looking at buying, or hey, I think you should buy this coin? I used to be more open to doing that until a few of the projects I talked about, the bear market came, they essentially went to zero. People start complaining because you tell people, look, never invest more than what you're willing to lose, but people just don't listen. And so by me telling people, or when I used to tell people, hey, I think this is a good price, blah, 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 people don't listen. And so I stopped doing it. When people ask me, well, I'm like, look, I don't know. This is what I have. I have Bitcoin. Majority of my portfolio is in Bitcoin. Do as you please. What's your guys' take on that? Do you guys tell people when they ask you, yes, this is a good investment, or check out this coin, or this coin is great? Or do you guys kind of have, the same thought process I do, as far as not, putting people in those positions to make those decisions, even when you tell them, listen, be careful, it might go to zero, it's risky, yada, 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 and people still do what they want to do. So curious to get your guys' take. Let us know in the comment section. Also, if you're new here, say hello. This was hilarious, bro.
What is it?
So, Rocco, growing up as a young boy.
Young boy. They can grow up as an old boy.
When you upset your mom, she would always say, I'm going to tell your dad, right? Or when you upset your dad, say, I'm going to have your mom handle you, whatever the case may be. Well, that is also true in the case of FTX and Sam Bankman-Fried. Dude, when I saw this.
Yeah, I saw it.
You saw this?
Yeah, I saw this one.
So, Sam Bankman-Fried's father was unhappy with his salary at FTX US. So he emailed his son asking for more money. Then he pulled the I'm telling your mother card and looped Sam's mom into the email thread. Guys, this is from the actual lawsuit. On January 12th, despite Bankman's employment agreement, Bankman being Sam's dad, detailing a $200,000 annual salary, Sam Bankman-Fried's dad complained to the head of administration at FTX.US that he was receiving gross pay of only $16.6 thousand per month when he was supposed to be getting $1 million a year. So that would be a bit more than $80,000 a month. Bankman, the dad, promptly brought his discontent to Bankman-Fried's attention, emailing his son, gee, Sam, I don't know what to say here. This is the first I've heard of the $200K a year. Putting Barbara on this, and Barbara being Sam Bankman-Fried's mom. What a nightmare this thing is, right? So, of course, we had the whole FTX. It's going to crash the markets. It's not, okay? When it comes to stuff like Bitcoin, there's plenty of open interest. We'll go over that here in a second. When it comes to things like Solana, not all of it's unlocked and available to
So you
trade.
think it's going to crash the market?
No.
Oh, okay.
I think
because
part
it's
of
been
it-
absorbed already.
I think part of it's priced in. I think part of it was us going to 25K. And now we're starting to stabilize around the 26.5 to 27.2 level. We're just building support. We're going to trade sideways. At the end of the day, guys, the liquidity is just not there, right? Until we see a massive shot of liquidity into our space or a black swan event happens, whether it's positive or negative, we're not really going to see big movements unless we start seeing cascading liquidations. And then, of course, with the order books being so thin, even a move that might have, a $2,000 move to the downside that might have taken 500 million in trading volume might only take 100 million. So that is just where we're at, the world we're living in right now until that liquidity comes in. And we'll get Mr. Yusko's take on it as well. And this yesterday, dude, Gary Gensler and the SEC have taken so many L's this year. The judge has declined the SEC's request to inspect Binance.us.
You know what is the only problem I have with this guy? It's using our money to do stupid lawsuit. They have no ends. That's the problem. You want to make a lawsuit? Yes, but using our money.
That's where they get their funding from. They get their funding from taxpayers.
It's so upsetting.
It's just funny. And this is the beauty of having checks and balances, right? When you have a rogue party or you have a rogue person or a rogue entity or a rogue branch of the government, which I'm not saying the SEC is a branch, but they're a watchdog. They're a regulator. And if they decide to go rogue like Gary Gensler has, guess what? We have checks and balances. We have the court system. And it looks like the courts are siding with us, right? The whole job of a judge and the court is to interpret law. And the way the SEC is interpreting law, the judges and the courts are looking at it and saying, yeah, nah, you gotta do better than this, Gary. This is absurd. I don't understand how this man, Gary Gensler, has kept his job, literally has brought shame, and the SEC has become the laughingstock of not just the US, but globally. I've seen so many videos from the Singapore crypto event, Token 2049, and all I kept hearing is, there's no bear market here. Everyone is celebrating. No one gives a crap about what the US is doing. How far have we come from the country here in the US being a leader in financial innovation and technology to now taking a back seat to other continents, other countries, some even third world countries? It's kind of sad, but again, it can only go on for so long, right? If this is the best fight that the government and the SEC can give us, we're already beating them. What more can they do? They've already tried to shut off our on-ramps. They already tried to tell banks not to service our customers. They already tried to have these exchanges delist tokens. They already tried to sue people out of work, to sue companies into bankruptcy, and they've succeeded in some of them. And we're still standing. We continue to fight. And guess what, guys? Gary Gensler is only in office for 2 more years. I believe it's 2026. And unless he gets fired or steps down before then, I'm just like, how many more L's can this man take before someone does something, or he just says, look, I'm done. I'm going to step away. Either way, we'll be happy. Let's take a quick break and say hello. Well,
let's give a little love to the chat. Go.
Let me look at our statistics here, guys. We're at 132 viewers, 60 likes.
We need to sign.
I know Rob's not here. Show me some love, man. Hit the like button. We have an amazing guest joining us. We have Rocco. You have me. Hit the like button. What is there not to like? Is it my shirt? Is it Rocco's hat?
No.
Is it his beard?
It's my beard. It's your beard.
All jokes aside, guys, say hello. We'd love to personally welcome you. All right, let's get into the crypto markets. And today's market segment is brought to you by our channel sponsor, I Trust Capital. There is one company we trust when it comes to saving for retirement and enjoying those gains tax-free, and that is iTrust Capital, the leading company in our space. If you set up an account with iTrust using our link, you'll receive a free $100 once you fund your account. Once you get in there, you can self-direct your Roth IRA account, and when it's time to retire, enjoy those thousands of % gains in Bitcoin or XRP or whatever favorite altcoin you have. You get to enjoy that without paying a single dime to Uncle Sam and whoever the sitting president at this time is. Now, crypto, Bitcoin, $27,203. Green across all three time frames, the 1 hour, 24 hour, and the 7-day. Market cap hovering over $530 billion. 1.3%. We're chopping sideways. I did have a Bitcoin chart here. So,
Bitcoin. Any strange pattern?
No, I'll leave that to Robin. I don't want to. I don't want to steal his thunder here.
Any camel? Okay.
But guys, this was like just. I mean, this is a pretty massive head and shoulders here, right? And then you had this neckline that got broken, and now we are retesting that neckline, which is here. I have drawn, and if we just kind of zoom in, right? So again, this is on the daily. So this trend line has been pretty solid since January of this year. So since the beginning of the year, we bounced off it as support, had a massive rally of approximately 40%, bounced off support here again, and had another rally of about 30%. And then we broke below this trend line and retested it as support back here on August 30th. And it looks like we're headed that way again, guys. If we do come up, when we do come up, we should meet some immediate resistance depending on when, right around, we'll just call it 30K. Between $29,200 and $30,000. That is the next level of big resistance we're seeing on Bitcoin. I'm going to go ahead and remove these drawings, and I'm going to throw on the Ichimoku Cloud, which is the easiest way for me just to see where the trend is going and where the cloud support and resistance is. Like it normally does, the Ichimoku just blesses us with these super easy areas of support and resistance. And it holds true as well, guys. I mean, just perfectly got rejected at the lower bound of this cloud. We did wick inside the cloud, but we got rejected right off of it. We are currently trading above the 9-day moving average. The red is going to be your conversion or your baseline, which is a 9-day moving average. And the blue is a conversion line, which is a 26-day moving average. This is bullish that the baseline is above the conversion line. What we do want to see, though, is we want to see this cloud flip green. So this looks 26 days ahead. That is what the cloud shows. It takes a 26 and a 52-week moving average. I know I'm kind of getting technical here, but this is a simple way to see where is the trend. So right now, we can still argue the trend is red. We are trading below the cloud, which is negative as far as price action goes. Once we get in this cloud, we're going to be in the zone of equilibrium. And then you want to see a breakout of the cloud. We should see some resistance, and I'll kind of post flags here so you guys can see. Depending on where we break out, on the upper bound of this is right around $28,557. If we make it to early October on this chart, you're looking at $27,800, and the next step down is going to be $27,500. So we need to recapture those levels. And then again, going back to, kind of zooming out here, that trend line I drawn earlier, that's where we kind of look at the 29 to 30K if we do break above as the next level of resistance. Now, what is it going to take? Yeah, no lagging span. I took the lagging span off liquidated shorts. There's one more indicator on here, and that is the lagging span, but I chose to take it off. And I'll kind of show you. Where's the lagging span here? I have the lagging span turned off, but where'd it go? Right here. So here's what the lagging span looks like, just so you guys can take a look. It's this green line. Kind of makes things a little crowded for the viewer, but this one, it is bullish when the lagging span is above price and above cloud. That's even better. But again, I choose not to show it because I like to keep the charts a little cleaner to show you guys on the channel. Now, the rest of the markets, well, real quick, fear and greed index, we're coming at 39, which is still considered fear. We are inching up to that 50 level, which is neutral. We did see us get as high into the greed as 64, and then came right back down. As far as volume, we're at close to 30 billion in trading volume over the last 24 hours, which is up around 4%. Bitcoin dominance inching back towards that 50% level, with ETH dominance dropping to under 19%. And the total crypto market cap is at 1.08 trillion. Ethereum, $1,650. What's interesting to me to look at is an Ethereum spot ETF that has been filed by multiple companies. Same effect, right? Same kind of liquidity coming into the market, except it's a little different. Ethereum, when we talk about price action, there's no more selling pressure from miners, right? Because it is not proof of stake. You no longer have to mine. It costs less money to run a chain, less recurring costs monthly. You don't have the cost of paying for energy, replacing new equipment as ASICs and miners. And so what could that potentially do? But I do want to pause some caution here. We don't even have a futures ETH ETF yet. The SEC did show acceptance. That's why we saw the 3, 4, 5 Ethereum futures ETF applications. But with the grayscale victory in court, will the SEC do a round or will they change? Will they change their tune? Right? It went from nope, we're not ready for ETH futures ETF. All right, fine, we'll start taking applications and looking at them. A lot of these companies say it's time. They filed. Grayscale won. The judge said, "Hey, you approved the futures Bitcoin ETF, and the price is correlated 99.9%. Why would you not approve a spot ETF?" That is no longer an admissible reason not to approve a spot ETF. Could the SEC now say, okay, well, in that case, never mind on the ETH futures ETF, because they know if they approve that, they might have to approve an Ethereum spot ETF. What we do know is as the spot ETF gets approved, I don't think it's going to stop at Ethereum. Then you can see an XRP spot ETF, potentially some of the other altcoins. We'll see where that goes. But either way, that would be absolutely amazing for price and liquidity. BNB token at $217, up 2.7% over the last 7 days. XRP, 51.5 cents. XRP, man. I talked about this yesterday. To me, this is an easy 10x to $5. A lot of things happening in the XRP ledger overseas. That is the beauty of crypto. If one country is acting a fool like the US, there's 200 some odd other countries, and some are going to see the potential. Others are going to use it out of necessity. And that is what we're seeing with XRP. They have a lot of use case when it comes to payment and building on their XRP ledger. Cardano, 25 cents. Doge, 6.2 cents. I know Robin made fun of me when I talked about Doge last time, but I have some exposure to Doge. You know, Elon Musk, we know the guy loves Dogecoin. I'm actually reading his biography right now. The guy, he's a smart guy. He's a big Doge fan. I believe it's going to be incorporated in some form of payments. We know they filed for a payments license. X or Twitter did. And we know what they want to become. And if there's a slight chance that Doge might be part of that, we're talking about 500 million users potentially having access to using Doge as a form of payment. The FOMO alone, plus the actual utility and use case, who knows? To me, it's on my tier 3 level of investment, something that I plan to take profits on, unlike Bitcoin. Toncoin coming in at $2.57. I know there's a lot of buzz around Toncoin right now, guys. Just be careful. Okay, just be careful, because a majority of these tokens are controlled by the top 10%, top 10% of wallets. I haven't looked too deep into their inflation rate, their tokenomics. We do know they're essentially an open network for people to build on top of. We know they're from the founders of Telegram. And this thing has been absolutely ripping while everything has been going down. If we zoom out to the 1 year, you can see, I mean, this is a pretty massive move from $1.20. We've essentially 2x, $1.20 to $2.50 over the last month. Nothing but up. So I always say, never jump on a train that's going 100 miles an hour. Wait for it to come to the next stop if this is something you want to add to your long-term portfolio. And then just kind of get a visual here on the crypto bubbles. A lot of green today, as mentioned earlier. Toncoin up 6.7%. GMX, Conflux, Link, The Graph, Atom, everything's in the green. A couple in the red, Nexo, Rollbit, and what is that? Rocket Pool. Those are all in the green. in the red. And then as far as open interest, I did mention we have about $12.5 billion in open interest for Bitcoin across all exchanges. That is up 1.6% over the last 4 hours and up almost 3% over the last 24 hours, right? Open interest, the liquidity, that is something that is extremely important to the price of Bitcoin and the price of just any risk on asset in general. And with that being said, I do want to bring on our very special guest today. It is his second time joining us on the show. It is none other than the founder of Morgan Creek Capital, the man himself, Mr. Mark Yusko. Sir, how are you doing today? Oh, Rocco is muted. Apologies, Mark. We'll get you unmuted here in a second. All right, so while we're working on that, we'll get Mark back here in a second, guys. But I just wanted to go over real quick, and we'll kind of tie this in to Mark when we do bring him on once we get his audio issue fixed. Wall Street Silver, everything is fine. It was only $31.4 trillion a few months ago before they suspended the debt ceiling until 2025. If we have a recession in 2024, the government usually does extra unemployment benefits, extra food stamps, and stimmy checks, along with plenty of bailouts. We could easily see a $3 trillion to $5 trillion deficit, taking us rapidly higher. And again, this is from Wall Street Silver. I know this made headlines just across Twitter and the web here. But guys, this is where all-time high, 33 trillion. We're going to continue to see all-time highs in debt. Government's going to keep printing money. So you keep hearing these headlines, all-time high, all-time high. It's nothing but all-time high moving forward. That's what it is. So, and then one more thing here. This was kind of interesting. The 2-year U.S. Treasury yield has moved up to 5.05%, the highest since June of 2007. A year ago, this yield was at 3.85%, and 2 years ago, it was at 0.23%. Now, why is this important? Let me take a sip of water here. To this day, U.S. debt is the only asset that financial advisors can label as being risk-free. And so when you look at, on a grand scale, nation states, countries, businesses, companies, when you look at what they do, 5% in a risk-free asset versus getting 5 to 7% in the S&P when there's plenty of risk. That is why when they say the interest rates being high on government debt is not good for risk on assets, that is precisely why. Because liquidity starts to flow away from risk on assets and investment, which includes Bitcoin and cryptocurrency, and flows in to risk off assets and risk, quote, free assets in the form of government debt and bonds. And so that is the importance of why it is negative for the likes of Bitcoin and crypto. Why, as far as why it's bad that the interest rates are high. And then we have this from Grayscale. And guys, apologies. We are working on bringing Mark on. We're having some audio issues, but we're going to work through. We're going to get him on here in a second. So in the meantime, Grayscale CEO, we're looking forward to working with the SEC on the next steps for our spot Bitcoin ETF conversion as soon as possible. Now, I know Mark was on Paul Barron a couple days ago, and a few numbers he threw out there, and I'll get his take here in a second. $300 billion flowing in. He believes BlackRock will be the number one, right? They'll be first to get access to get granted the spot ETF, and then more things will flow. Although he did mention that he believes practically everything will get approved at once. We know the next big date is October 16th, but the bigger date is October 17th. October 17th deadline includes BlackRock. So we'll see what happens, but we do know that once these get approved, the floodgates go like this. The floodgates get completely opened, and we'll kind of see where that goes. All right, let's take a look here. So just want to go over this real quick. I did kind of highlight this earlier when I went over the coin market cap. Why FTX's token sale is a non-issue for crypto stability, Coinbase explains. So this is sourced from benzinga.com. The crypto market is expected to remain stable despite the sale of tokens by bankrupt exchange FTX. As Coinbase Inc. reports, protective measures capping initial sales at 50 million per week, increasing to 100 million in subsequent weeks. So again, we talked about this yesterday, is it's not just, all right, $5 billion, okay, let's go sell it on the market, let's go dump it on the order books. No, that's not how it's going to work. It's going to be average buys. There's going to be the weekly caps on what they do. And if they want to increase those caps, they have to get approval from the judge and from the council. And so the idea is that you got to think of it this way too, guys. The bankruptcy, or not the bankruptcy team for FTX, the team that is currently in charge of FTX, they understand if you try to dump everything at once, the back end 50% of the tokens you're trying to convert into US dollars is going to take a massive hit. And so they understand that it's got to be a slow sell, a slow bleed. Let the buy orders come back in, scoop up the dip, stabilize, sell again. It is what it is. But guys, I believe unless something crazy happens with Binance, which it very well might, because there's so much pressure from the US and the Department of Justice that they might just come out and say, oh, well, you need to shut off, or I don't know what the hell the US government could do. But short of Binance going under, I think this FTX sell-off might be the very last, well, I lied actually. The FTX and the US government selling their 30,000 some odd Bitcoin. But here's the beauty of it. Long-term holder supply is at an all-time high. We know people are more bullish on Bitcoin now, seeing what the federal government has done, seeing how they continue to debase the currency. So it is what it is. And then here, following a court decision, FTX has been granted permission to liquidate and reinvest these assets to settle its debts with creditors. David Duong, the head of institutional research at Coinbase, emphasized the stringent regulations governing the sale of specific insider-affiliated tokens. Such sales mandate a 10-day prior notification to the committees above. Furthermore, due to the token's vesting schedule, a significant portion of FTX's Solana tokens remain inaccessible until 2025. 2025. Then I want to go over this. As well. New UK bill would allow police to seize crypto before an arrest is made. So this is from Protos.com. A new UK bill due to come into force later this year would allow police to confiscate potentially illicit crypto before suspects have been convicted or even arrested. This new bill, enabling law enforcement to recover crypto assets in this way, will be a powerful tool, and it is anticipated we will see a substantial increase in digital assets being recovered, said Luis Abbott, the partner at Keystone Law, in a statement. Phil Ellis, the director of UK Public Sector Relations, said, quote, "Time is of the essence. I'm sure there have been instances worldwide where delays have caused law enforcement to lose the assets because a subject, a third party, has moved the assets." It would go to, and so they talk about where would the money go? It would go to either the law enforcement agency that seized the assets or to fund economic crime work, and then half of it goes to the Home Office, again, solely to fight economic crime, which is really important. The scary part of this to me is this one line. Potentially, or to confiscate potentially illicit crypto before the people have even been convicted or arrested. So what kind of precedents are we setting here? And I know, the UK is not the US, and my mouth is really dry, so let me sip some water. We know, at least here in the US, and we like to believe, some parts of the world, innocent until proven guilty, right? So what this says is the government in the UK can essentially confiscate crypto if they believe or have reason to believe that it was illicit. It was used in illicit activities. It was used for money laundering. And maybe you were just sending it to a friend in India or in Sweden or in the US or whatever the case may be. So this is taking what Bitcoin was meant to solve, and you're just re-intervening it into your current crap system that you have now. And so it's sad. It sucks, but guys, if they can't, this is their last ditch effort to control, right? To control crypto. And if they can't, then it is what it is. Yeah. Incentives to steal your crypto. That's a bad bill. JP Trees, I 100% agree. Incentives to steal your crypto. So there we go. All right. Let's move on to, all right, guys. We are going to unfortunately have to reschedule Mr. Yusko. So apologies there. We're good. Hold the door. All right. Yeah. Okay. Okay. All right. Never mind. We're picking him up. All right. Let's go over this. This was kind of interesting. So I shared a tweet, or I shared a Twitter Spaces with this person, Luke Mikic. Michael Saylor has said that Bitcoin can hit $5 million if these three things happen. And the three things he lists are the FASB rules change, which we know has already happened, spot ETF approval, and banks beginning to custody crypto. Then you have Peter Thiel believes three people are blocking Bitcoin from 100xing and hitting $4 million. Jamie Dimon, Larry Fink, and Warren Buffett. I'm curious to get Mr. Yusko's take on this, and I believe we're good to go. So let's go ahead and bring Mark in here. Mark, how you doing?
Hey, doing great, except can't really see very much, but that's all right. Apologies for the technical difficulties. How you doing?
We're doing great, man. Thank you so much for joining us. Sorry on the technical difficulties as well. I do want to say a big thank you to you because you're such an important voice in our space, and you've been nothing but kind with your time, going on not just our channel but other channels as well, kind of giving people perspective and knowledge. And so on behalf of us in our community, we truly appreciate it. We love getting your insight. Last time you were on our show, what an amazing conversation that was. And so I want to start with macro, right? So I did share a tweet earlier, right? National headline, all-time high debt, $33 trillion. I got a feeling that headline is going to replay over and over the next few months. What are your thoughts on where we are at on a macro level? You have debt rates going up to 5%, treasury yields going up. You have oil going up, and liquidity is pretty dry in the crypto space. What are your thoughts on macro and how that kind of integrates with Bitcoin and crypto?
Yeah, look, the macro environment is very unique in the sense that we have a Fed that jawbones that they're committed to removing liquidity from the system. And they actually have successfully decreased the money supply, the M2 money supply, for the first time in over 100 years. So that's actually saying something. While conversely, around the world, central banks are starting to loosen the spigots again. You're starting to see people cutting rates for the first time, particularly places like China. So that macro backdrop of monetary policy is kind of mixed. The part that isn't talked enough about is fiscal. The fiscal policy spending, and that's what that debt is reflective of. Look, we put over 1.4 trillion with a T dollars into the economy through these government programs. And whether that's, my favorite is disability payments. And the number one new disability for people, stress. I'm like, I have stress. You have stress. People have stress. I don't think that should be something you receive disability payments. but it's essentially a shift from unemployment benefits to just handouts. And you got the student loan relief, you got all kinds of programs that are getting slammed through DC basically to buy votes, right? That's what this is all about. And then on top of it, you've got the money laundering. I probably shouldn't say that out loud, but the money laundering that's going on in Ukraine. And you throw all that together, look, you give me $1 trillion, I'll show you a good time too. And that macro offset is why we didn't have the recession that 99% of economists were forecasting the beginning of this year. And why economic growth has gotten back to stall speed around 2%. That's nothing to write home about. It's not awesome, but it's kind of where we're going to be stuck for the next couple decades as the boomers, my brethren and sisterin, continue to retire 10,000 people every single day for the next 14, 15 years. So that downward pressure from a working age population perspective and a productivity perspective is going to put pressure on economic growth, which is going to put pressure on lawmakers and monetary policy rulemakers to try to keep the party going. So all of that said, someone asked me, what do I think is going to happen to Bitcoin in that type of environment? And I actually think it doesn't matter. Why would I say that? Well, I think, did I lose you guys?
No, you're good. You're good.
Oh,
We're paying attention.
No. What I think is more important is the halving cycle. The halving cycle has kind of engaged. We're in crypto summer, which is the third season or second season if you follow spring, summer, winter, fall. People think crypto summer means straight up. No, crypto summer means a gradual increase toward fair value. And we reach fair value sometime around the transition to fall, which will be right after the halving next year. It's that crypto fall period post-halving where you get the parabolic move. Now, why does that happen? Well, what happens is crypto winter destroys everything. Right? Price falls way below fair value, sentiment turns negative, flows turn negative, everybody's depressed, and the market gets wiped out. So I think this last one was 74% peak to trough for Bitcoin, more for altcoins, and sentiment got pretty low. So then you bounce along the bottom in crypto spring, and then you start this slow, gradual uptake in crypto summer. So from June of last year to today, there's not a lot of increase in price. And then we had, Hurricane Sam, which kind of took us from 26 down to 15 temporarily.
Hurricane Sam.
Ever since that, oh God, the guy's a disaster.
Yeah.
But ever since that event, we've had a series of higher highs and higher lows. That's a sign of accumulation. And what that means is investors, I put myself in that category, investors like to buy things below fair value. Yeah. So we look at Metcalfe's law models and we say the fair value of a Bitcoin is around 50K, maybe 51, 52, it doesn't really matter, but call it 50K. And if it's selling at 26, I'm a buyer. So you'll start to accrete towards fair value. Well, what the halving does is it forces the fair value to double. And you say, well, how does it do that? Well, if you think about it, the miners, which secure the network, their costs are fixed. Electricity, machines, air conditioning, et cetera, pretty much fixed. If the number of block rewards handed out were cut in half, most of them would go out of business if the price didn't move. So the price has to move. It's kind of hard-coded that the price will rise. And what's interesting about that is that attracts attention. Movement attracts attention. I tell the story, right? It's kind of silly, but it's true. Right? My wife says, go get the ketchup. I open the refrigerator. I'm like, honey, there's no ketchup. She walks up, grabs the ketchup bottle. If it ain't moving, I can't see it. I'm a hunter. I'm a guy. If they ain't moving, I can't see it. If someone were to walk past me, I would immediately look and see them. But if it ain't moving, I can't see it. So once the price starts moving to adjust for the halving, more people come in. And as the price reaches fair value, as we get closer to that 50K, right before the fair value is going to double to 100K, then the speculators come in. Well, what's a speculator? A speculator is simply the opposite side of a hedger. Hedgers are people who have to sell because they produce an asset and they need the cash flow, like miners, like oil producers or gold producers. They sell in the futures market, in the paper market, and speculators come and take the opposite side. They're not good or evil. They're just necessary. Well, then the evil happens. So as the price then starts to really ramp, the gamblers come in. And the gamblers are people who don't give a shit about the price or the fair value. They just want movement and they want to jump in. They don't really understand the product that they're buying. These are the people that bought GameStop or AMC or, it doesn't really matter what it was. It could be anything. In this case, it's Bitcoin. And so that pushes the price above fair value. And then the levered gamblers come in. And this is where it gets ugly. So if you remember the last cycle, fair value was 30. We got all the way to 69. Silly number. But why? Well, there was a lot of leverage. You can still buy 100 times leverage. That ends badly. You buy an 80 vol asset with 100 times leverage, that will end badly. And it does. And that's what causes the winter. So you get this parabolic blow off top in crypto fall. That's June of next year to June of 25. And then we'll start the next bear market.
You brought up, the baby boomers, and I just want to ask you, the amount of wealth that baby boomers hold, I think the numbers I've heard is $40-50 trillion. They're calling it the greatest wealth transfer ever. My question to you, Mark, is how do you see that playing out as that wealth transfers from the baby boomers to the next generation? I don't know if it's Generation X or the millennials. As it trickles down, what percentage of that do you think can flow into assets like Bitcoin or cryptocurrency versus where it is now?
Huge. I mean, this is the great tailwind, right? So the ETF, it's big. So when BlackRock's ETF gets approved, which it will, and I'm not going to tell you what day, but I'm telling you, BlackRock's will get approved. And I'm going to go out on a limb and say none of the others will get approved, which I'm kind of sad about because I own pieces of two companies that are first in line ahead of BlackRock. But
why do you say that, Mark?
Going to get denied.
Why do you say that?
Let's just say in this world, who you know matters than what you know. So there's a reason that BlackRock is 755 out of 756 in applications for ETFs. It's not an accident. So, and look, that's the short version. The long version is there's a group of people, right? The incumbents, the banking industry, the asset management industry, the auditing industry, the accounting industry. It's a $7 trillion a year, I won't say grift because it's not really grift, but it's frictional money that doesn't have to exist because now we have technology with blockchain that can eradicate the need for the trust industry. The trust industry has only existed for 800 years since the Knights Templar invented fractional reserve banking in the 1100s. And then the Medicis stole the idea and created, banking in Italy. And then the Rothschilds stole the idea and kind of created the morass we're in now with the creation of the first central bank in 1607. Like, if you think about world history, it's like, okay, I can understand that Portugal was the most powerful country in the world in the 1400s. Doesn't make sense. They're the size of Indiana. So how were they the most powerful country in the world? Well, they had the most powerful navy and they were charting the course of the world. People don't realize, this is crazy, there were no horses, no cows, no chickens, no pigs in North or South America until the Spanish and the Portuguese brought them. And there were no tomatoes in Italy and there were no potatoes in Ireland. They came from South America. So they were the most powerful. And then Spain took over Portugal. Well, then how does, again, a country the size of Ohio take over Napoleon? Greatest general maybe that ever lived. Maybe Alexander the Great was greater. I will argue he probably was. But I have respect for Napoleon. So how does this little country, the Netherlands, take over? Well, they faked it, right? They printed money out of thin air by creating the first central bank, the Rothschild family. And the Rothschild family was pretty good at this, and they hired a bunch of mercenaries, and they created a more powerful army, and they took over. And so they had the world reserve currency for about 75 years. And then half the Rothschilds, or some portion of the Rothschilds, I don't know if it was half, but moved to England, set up the Bank of England. And then they became the world superpower, and they had the world reserve currency, and they got the steam engine, and they had a colony in the United States. And then suddenly in 1913, we set up the Federal Reserve, and 30 years later became the world reserve currency. And we got in bed with the Rothschilds and all the rest. And here's a crazy stat. That one family, and that's a big family, right? Lots of descendants, big family, has more wealth than the bottom 3/4 of the people on the planet.
That's insane.
So you asked the question about wealth. Yeah. So other than the Rothschild wealth, the rest of us boomers, we have, I could say, somewhere in the 40s trillion. And whether it's 42 or 47 doesn't really matter. Let's call it 40 trillion with a T, which means $1 a second for 31,710 years. That's one. So we got 40 of those babies. And here's the thing. You ask anyone over the age of 35, ask anyone in my age cohort, who's your broker? Oh, UBS, Merrill Lynch. Why? How much gold do you have? I don't know, 3-4%. How much Bitcoin do you have? Oh, 0. Are you kidding me? It's a Ponzi scheme. Haven't you heard that Peter Schiff guy? How often do you use DeFi? What's DeFi? Ask anyone under 35, who's your broker? What's a broker?
Yep.
I mean, I got a Robinhood account.
Yep.
How much gold do you have? Oh, 0. Boomer rocks? Yep. Haven't you heard that Peter Schiff guy? Yep. How much Bitcoin do you have? I don't want to talk about it. Why not? It's like a really big percentage of my net worth. I'm kind of embarrassed. How often do you use DeFi? Every day. So that digital divide is real. So back to the thing about the ETF. When the BlackRock ETF gets approved, somewhere between 30 billion and 300 billion is going to come into Bitcoin.
That's insane.
Where's that number come from? Well, there's 30 trillion in boomer assets held at UBS and Merrill Lynch and all these places that don't allow you to buy crypto today, right? I have a family harmony account at UBS, my brother-in-law, and every time I try to buy something related to crypto, UBS says no. No GBTC, none of the miners, nothing. And fine, whatever. But once BlackRock gets approved, they're all going to have to buy it. And whether it's 10 basis points, which would be 30 billion, or 1%, which I'll argue is going to be 1% plus, that's 300 billion. The whole market cap of Bitcoin is only 500 billion. So 300 billion, and it's not on 500 billion, it's on the free float, which is only about 100 billion. So 300 billion of new capital on 100 billion of free float, which is minus the hodlers and the Satoshi wallet, et cetera. That's going to be a big move. So that's big. But what you're talking about is way bigger. So over the course of the next, 15 to 5 years, all of us, whether we like it or not, we're going to pass. And, it's just part of life. We're going to pass. And that $40 trillion is going to our kids, the echo boomers. They ain't going to leave it at Merrill Lynch or UBS or Morgan Stanley or Goldman Sachs. They're just not. It's going to move into digital assets. And I say this all the time. So I have a Gen A Zoomer, as she is called, granddaughter, is 1 year old. She will never have one of these. Yeah. She will never have a leather wallet. She will never use paper money. She will only use crypto. She will only have a digital wallet. She will have no concept of a credit card. What are you talking about? A credit card? I'm going to use my crypto. So all of this is real. And this is why Bitcoin's such an important investment and why everybody must own it. And that's why my hashtag get off zero exists. If you have zero, one, you're just, I guess, not very bright because you're not really paying attention. I shouldn't say you're not very bright, but it's
you're right.
Less intelligent than the alternative. But the reality is you're not being a good fiduciary. If you're an RIA and your clients have zero, you've missed it, right? Over the last 10 years, had you put 1%, half from stocks, half from bonds, that portfolio would do 250 basis points per year better with less risk. What do you mean less risk? It's a risky asset. But it's uncorrelated with all the other assets. It's 0.0 correlated to bonds and 0.15 correlated to stocks, which means when I add Bitcoin to a traditional portfolio, my risk goes down. Let that hang there for a second. It goes down. The risk of the portfolio goes down because it zigs when other things zag. And because of that, look, Markowitz won the Nobel Prize for this. When you add high volatility, risky assets that are uncorrelated to one another, the risk of the combined portfolio goes down. And that's how wealth is created, by building diversified portfolios. Actually, that's not true. Wealth is created by concentration. Concentrated equities position, business ownership, real estate. That's how you create big wealth. But how you preserve wealth, how you become multi-generational like the Rothschilds, is diversification across high volatility assets that are uncorrelated. And therefore, if you have zero exposure to Bitcoin, you have an inferior portfolio, full stop.
Yeah. You know, Mark, you bring up a really good point with the investment advisors. One of my good friends that I met through my restaurant job that I had, he owns a wealth management firm in Los Gatos, and I try to bring him on the show, and they are so afraid. They're like, we need the questions a week, 2 weeks in advance so we can send it to compliance because we cannot talk about this, and this.
Right.
And all of a sudden now you have a regulated product like a spot ETF. And we understand that investment advisors, they make their money a percentage of how your portfolio performs. And so if now you have an asset, knowing that it's coming to a halving, knowing that the network continues to get stronger and get adopted, you'd be kind of stupid to not at least start talking about it with the people that are coming in biannually or annually to sit down and look over their portfolio. It's going to be an arms race. Look, our portfolio managers brought back 18%. And a majority of that was Bitcoin. So if you're not offering Bitcoin, you're not serving your clients. And like I think you said it perfectly.
No, you're not serving your clients. And look, you're gonna get what's called an ACAT. And I don't know what ACAT stands for, but ACAT, which is like customer transfer of monies or something. And this is no different than what happened in 2002. So I had this guy come to me and say, hey, I just lost a big account. I got an ACAT. And I called him up and said, what's up? And he says, oh, I'm transferring some money into this hedge fund of funds. He says, well, I didn't know you wanted hedge funds. And he said, well, neither did I until they asked me. And that's the key, right? Is if you don't have Bitcoin and other digital assets in your portfolio, those portfolios are going to go away. Particularly as the digital natives, right? The generations that grew up with, this in their hand their whole life, as they control the capital from their parents, from me and my wife and our brethren and sisterin, if you try to convince them that they need to go backwards, it's not going to work. They're going to ACAT all the money away, and you're going to lose your business. And so, the most successful people in the future are going to be forward-looking in terms of most successful in terms of investment advisors, because there's still a need for investment advice. Now, I will argue we're not that far away from all of it being done on chain. I mean, imagine a future. This is amazing. Imagine a future where you have, I'll talk my own book, endowment fund token. Now, I don't have this yet, but I'm thinking about it. So the endowment fund token. Now, why the endowment fund? Well, the endowments had the best performing portfolios of all portfolios. Why? Because they overweight innovation as an asset class, my pinned tweet on Twitter, and they take advantage of the illiquidity premium. So they invest in things that the average investor is precluded from because they're trying to be protected by that three-letter agency. Really, it's just a walled garden to keep the rich, super rich, and the rest of us not less rich. Imagine a token that 24/7 is scouring the world for the best investment opportunities, allocating capital on your behalf according to a scripted plan, strategic investment policy, rebalancing in real time, and getting you access to things that you never would have dreamed you'd want to own, like collectible Porsches, the #1 performing asset class the last 10 years. It's not Bitcoin, it's collectible Porsches. Why? Because there aren't very many that survive what's called the dentist wrap phenomenon, which is not fair because it's not just dentists. But said person buys Porsche. No one tells him that you should not accelerate and turn the wheel at the same time. They do, and you wrap it around a tree. End of Porsche. So the ones that survive become so rare that there are 3 people in the world, Jay Leno, Jerry Seinfeld, and John Shirley, who is the #3 guy at Microsoft, will pay whatever price necessary to own those rare cars. And so you could own a fractional share of those. Or how about this one? I don't know if you can get a piece of this one, but this one's amazing. So Magic the Gathering issued a 1-of-1 Lord of the Rings ring card. Only one in the whole world. This guy got it. And he took a video of it, and it's amazing. The guy's hand is like shaking as he's holding this card because it's $2.5 million, and it might be worth more than that. Or the Beeple. Now, full stop. I don't really love Beeple stuff. No offense. I admire him as an artist. I admire the most that he's done something that I'm certain that I've not brushed my teeth every day for the last 13 years, right? Went camping, forgot my toothbrush, whatever. This guy made a piece of art every day for 13 years.
Damn.
Put it together in a single piece and sold as an NFT for whatever, $59 million. And people are like, oh my gosh, that'll probably be worth $1 billion someday.
Yeah.
It's a 1-of-1. You can't replicate that. There's no way someone's going to make a piece of art every day for 13 years. It's just not going to happen. So whether you like the art or not, it doesn't really matter. That is a scarce asset that I would want to own a piece of. Or there's these certain trees on the western coast of Australia that are prized for their medicinal powers. Well, they tend to grow really fast. Well, how about owning a piece of the farm that grows those trees? Or how about, owning a piece of the company that produces all the shrimp that we get in restaurants in the United States? They happen to be based in Thailand. Yeah. So there's all of these things that a token in a real-time AI-powered blockchain resident ledger could create, and I wouldn't have to worry about managing my own money. Think about it. I shouldn't pick on my daughter, and I don't mean to pick on her because I love her very much and I'm very proud of her and I respect her, but she really has no business managing her retirement. She's a nurse practitioner. She works her butt off. She's got little kids. She has no time. She doesn't really have much interest. It's not that she's not capable. She could certainly do it, but she doesn't have the time or the interest. That should be managed by professionals. It should be managed by an algorithm in the token world in a way that she gets the maximum exposure to the best opportunities all the time. Now that's coming. That's not tomorrow. In the short term, she should have an investment advisor, and that investment advisor should take care of her, and that investment advisor should own digital assets. But the future is pretty cool.
If you were to say that 10, 15 years ago, people would look at you all crazy. But that's the excitement of what blockchain and AI and technology can do, is exactly what you just said. And it's just so exciting to be in a space where it can make that possible. Mark, I want to share, and I kind of read this tweet off before we brought you on, but I want to share this again, and I want to get your take on this. So Michael Saylor has said that Bitcoin can hit 5 million if these 3 things happen, right? The FASB rules change, which we know happened. By the way, what are your thoughts on that real quick? Are people blowing it out of proportion, or is that really a big of a deal as the people like Michael Saylor and some of the pundits are saying?
It's a big deal. Look, the trust industry is based on rules, right? The rules allow the incumbents to have monopoly powers. They allow certain assets to thrive and other ones to languish. And so as important as the rule change that caused the subprime blow up, which was the mark-to-market ruling, this is equally big. So rule changes are incredibly important in the trust world. As we migrate out of the trust world to the truth world, and what blockchains do is they replace trust with truth. In the old days, I lent you money. I wrote down in my book, you owe me money, on my papyrus tablet because I'm an old guy. And you come back the next year and you go to pay me back. And I'm like, oh, you owe me 200, not 100. But I only borrowed 100. But I'm an unscrupulous guy. I changed the book and there's only one book. So the Medicis came along 800 years ago and said, no, there should be two books. You keep a book, I keep a book. And we, the benevolent Medicis, for a small fee, will make sure the books match. But here's the problem. The Medicis were corruptible. So I go to the Medicis during the year and say, I'm going to change the number to 200. I'll give you half. You come back to pay. I say, no, you owe me 200. And you're like, hey, Medicis, I only borrowed 100. And they're like, you must have written the number down wrong. I'm sorry. So we need someone to look over their shoulder. That's what a blockchain does. And it's so powerful when we don't need trust. You don't have to trust me. I don't have to trust you. We have truth. And that truth is so profound that it will eventually replace the need for these rules. But in the short term, that rule change is big, very big.
Yeah, like I said, a lot of people, and this is, not in my world, as far as accounting and how to put it on your balance sheet, but I know a lot of people were excited about it. And then the other two things that Michael Saylor has said for Bitcoin to hit 5 million is a spot ETF approval, which I think we all agree is going to happen, and then banks beginning to custody Bitcoin. What are your thoughts on that? We're talking about a 200x in market cap for Bitcoin if it does get to $5 million.
Yeah.
Are we not thinking big enough? Are we kind of crazy here? What are your thoughts on this?
Look, I mean, let's just do the math. So let's just do the math. So 250K, it's a walk in the park, right? 10x from here, it's a walk in the park. Why? Well, that would be gold equivalents, the monetary value of gold. So the monetary value of gold is about 5 trillion. The rest is, there's another 5 trillion of jewelry and chalices and gold leaf on the dome where I went to school, but that doesn't really count. So the monetary value that sits in the central bank vaults, about 5 trillion. Bitcoin is digital gold. It is superior to gold. It's more portable, more divisible, and it's equally scarce. So it's the gold for the next 5,000 years. Great. So 250K in the bank, not tomorrow, but at some point, that's super easy. And as I said, if the fair value based on Metcalfe's law by next April is 100K, we're 40% of the way there. And, the next halving 4 years later, we always add a zero. So we 10x every halving. So we would go to $1 million at the next halving. And then the halving after that, in theory, we could go to 10 million. And so that's twice what Saylor's saying. Well, here's what has to happen for that to happen. So to go from 250K to $1 million, right, which would be the next halving 4 years in 2028, what would have to happen? Well, now we're talking about 20 trillion. Well, 20 trillion is about a 20% market share of global currency. Global currency is about 100 trillion. So, okay, that's reasonable. In fact, Murray Stahl would say that's conservative because you're definitely going to get all 100, and there's your 5 million. So 5 million basically says you replace all global currency with Bitcoin. Technically, totally sound, right? It's a better form of money. Logically, sound. In actuality, highly unlikely in the near term because governments like controlling fiat. It's the way cronyism works, right? I always do this, right? The all-seeing eye.
Yep.
The people at the top of the pyramid love fiat. It makes them super, super rich. And what do? Well, they just steal from the masses through this thing called inflation. They convince you that inflation's good for you. That's just a tithing to the rich people. And it's insane, right? Why is anything that reduces the purchasing power of the money that I toil for over 30 years good for me? On no planet is that good for me. So money should not be able to be created out of thin air. So Bitcoin is a superior form of money because it's deflationary as opposed to inflationary. It actually accretes in value over time. That said, the likelihood that governments give up their fiat powers without a fight, unlikely. Now, the true maximalists, and I don't mean that in a derogatory sense, I would say maxi if I meant derogatory. Maximalist would say, doesn't matter if you fight, right? The technology is superior. All superior technologies win. And good money crowds out bad. And Maury would say. And that's an elegant thought, but it's the reverse of what actually happens. Gresham's law says bad money crowds out good.
Yeah.
And that has been history. And that's why you see hyperinflations like Weimar and Zimbabwe and what's going on in Argentina right now, which this new guy, he might fix. I like him, Milei. So ultimately, look, he says 5 million, Kathy says 4 million. It's hyperbole for hyperbole's sake at this point, I think. It gets attention, it gets clicks. The likelihood that we get to 100% of global monetary value on the Bitcoin blockchain, I'm not there yet.
Yeah.
I'm not there yet.
So what does Mark Yusko say in 10 years? What's your range of where do you think Bitcoin could be price wise?
Well, so let's just follow my own analysis. So if every halving we have historically added a zero, meaning we get a tenfold increase according to the Metcalfe's law. Because remember how Metcalfe's law works? It's a parabola. So the early days, the growth is really fast. So we went up 40x, then 20x, then 10x. And so, but that growth stables out just the way mathematics works. And so I'm fairly comfortable next halving we go to 100K fair value. $28 million value, I'm pretty with that, right? Because at $1 million, we're at 20 trillion. That's 5 trillion for gold and 15 trillion for the portion of the monetary system that we've displaced, other currencies. Euros and yen and other pieces of toilet paper that go down. Beyond that, I just think it gets harder and harder, and the law of large numbers starts to work against you. And so, at 20 trillion just for Bitcoin, that's a pretty big stretch. Now, you could argue, but wait, every asset, every stock, every bond, every currency, every commodity, everything is eventually going to be on-chain. Highest value assets migrate to the most secure chain. Ordinals is kind of proving that out as things switch from Ethereum over to Bitcoin for high value assets, digital artifacts. But that may or may not increase the supply and demand for the monetary piece. One of the challenges of Bitcoin, like gold is the asset that exists both as a commodity and a currency. When it's a commodity, the price tends to be not very good, like what we've seen since 2011. We went down and then we went up, and then went down and then went up. It's kind of because commodity based. When gold is currency based, that's when we get the big moves. Because remember, an ounce of gold is 1 ounce of gold, and an ounce of gold for 5,000 years has bought a fine person's suit. It's not that the gold changes; it's that the money gets worse. So we don't price gold in gold; we price gold in dollars or yen or euros. So in dollars, the price of gold has maintained purchasing power for 5,000 years. And here's the interesting thing, stocks look like they're making all-time highs, well, except because we price them in toilet paper, in dollars. If we price them in gold, they're dead flat since 1997. All I've done is devalue the currency since then. So the same thing with Bitcoin. One Bitcoin is one Bitcoin. Bitcoin doesn't change, but we don't price Bitcoin in Bitcoin. We price Bitcoin in dollars or yen or euros. Like look at Bitcoin in Argentinian pesos.
Yep.
There's never been a bear market. Turkish lira, never been a bear market. Venezuelan bolivars, never a bear market. So when the currency is being devalued, your Bitcoin holds value. If we price it in dollars, it has some fluctuation, but that fluctuation is rising, right? We're making higher highs and higher lows. That's because the network value is growing. So that's a long-winded way of saying, I think we comfortably hit, 150-ish sometime in 2024, and that's blowing through fair value of 100. We probably don't get the 2 or 2.5x this time because there won't be as much leverage. Maybe with the ETF we could get to a couple 100K. Then we have the bear market again. We go down, probably 70% this time, maybe 65. So we lose 2/3 of the value. Then we start the relentless climb back up. That $1 million mark in 2028, I think that's a little bit aggressive, but not out of the realm of possibility. So in 10 years, could we comfortably be in the 7-figure range? Yeah, I'm pretty comfortable with that.
Okay. And obviously, guys, we're what Mark is doing here, he's extrapolating what he believes is going to happen. I know a lot of people are oh my God, that's crazy. But this is a technology and an asset we've never had before. And so the best we can do is look at history, look at, assets and kind of compare them. What a lot of people do is compare them to gold, rightfully so. A lot of people do say Bitcoin is digital gold. Mark, yep. I do want to
add. I just realized I got to run. My assistant is banging on my window saying I'm over time, but great to hang out. We'll do it again sometime, and appreciate all you guys do for the space, and thanks for having me on.
Mark, thank you so much for your time. Enjoy the rest of your day. We'll see you next time.
All right. Be good. See ya.
Take care. Man, it just, it's just, he explains things like telling stories, and it really resonates with a lot of people, including myself. And so, man, what an amazing guest. So big thank you to Mark. We appreciate it. We're definitely going to have him back on the show. Not sure when, but we're definitely going to have him back if he'll join us, which I'm pretty sure he will. All right, guys, do we want to give a couple last shout outs to channel sponsors, Cam's Blue Wire Technology. If you want to learn how they can help your business, visit bluewiretech.com. Also, big shout out to Radix, the top layer 1 DeFi in our space. Their CEO will be joining us tomorrow. We're going to discuss Babylon Upgrade, what Radix is doing, all the new and exciting things happening in the ecosystem. Speaking of new and exciting, there's new and exciting things happening on internetcrypto.com. That is our merch store. You not only find Sin City merch, but other merch as well. Yes. Also, guys, go follow us on Twitter at Sin City Crypto 1. And if you want to support the channel, there's plenty of ways to do so. And with that being said, Rocco?
Yes.
Guys, thank you so much for tuning in. It was an absolute blast. Come back tomorrow for an even more amazinger show. On behalf of all of us here at Sin City Crypto, love you guys. Till tomorrow.
Sin City Crypto. Everybody know we here for entertainment and info. Gonna show you how to get that big dough. So every day stay tapped in for big facts, no capping. With Bitcoin, if you're in, then you win. We divide the pie with no fraction. It's Big Rob, David. I spit the game, but they gave it. Named according to your favorite. I got dry powder, why save it? To the OGs, new beginners. Special shout out to the well members. Buy dip, sell winners. Ain't really nothing you can tell sinners. Tune in for the latest new flavors. They gonna teach us mean coins. They polarizing like barbecue chicken pizzas. I laugh with a major grin. Laggers, we trade them in. Baddies, they came to sin. And sinners gon' play to win. Screaming, hola, till my bags are flowing over. Hold ya to the moon and to the solar. Won't I? Don't be letting FOMO control ya. It's over.